But there's really 4 reasons why somebody buys commercial real estate in the first place, or any kind of investment real estate. And there's appreciation, depreciation, cash flow, and equity. All right. So appreciation is the idea that you buy something for X and you sell it for Y later on, and that Y is more. So if you buy something for $1 million, you sell it for $1.5 million. 5, 10 years later, it has appreciated in value. It's worth more. Pretty easy. Depreciation is a little bit weird, and it's unique to commercial real estate. And it says that I get to depreciate what I buy over a period of years. Man, if you bought $1 million property, you could depreciate that over 27 and a half or 39 years. Now, here's what that means. If it's multifamily property or residential, you can depreciate it over 27 and a half years. So you take what you bought it for minus the land value, and whatever's left, you can depreciate that over 27 and a half years. So let's say that comes out to $10,000 a year of depreciation, and you make $100,000 a year. It would reduce your taxable income from $100,000 to $90,000. So that depreciation is like a phantom expense that you don't have to pay that lowers your taxable income every year. So if you've ever heard somebody talk about commercial real estate as a tax shelter,
Never heard that.
well, that's what they're talking about. It shelters some of your income by creating an expense that's on paper that you didn't actually have to lose dollar bills. Dollars didn't leave you, but you got to reduce your taxable income. That's what depreciation is.
Can I say that back to you? Because I'm a little confused.
Sure, go ahead.
You're subtracting the value of the land because that does not depreciate, correct?
That's correct.
Does the land appreciate?
Right, so you buy a building.
You buy a building.
The building has a useful life. At some point in the future, that building's not going to be there. But the dirt underneath it, it will be here. You can depreciate a property, but not the land.
What's the 27 and a half years? Like that's the average life of a building?
No, it's
Like,
what
where'd
the
that come
IRS says. It comes from the tax code.
Yeah.
Now, we talked about apartments, 27 and a half years. Everything else, office building, industrial, retail, that's all 39 years. So $1 million, let's say the land value is $200,000. So you're able to depreciate $800,000. And you just take that number and you divide it by 39 years. And that's how much you can depreciate every year.
Depreciation, is that the same as a deductor? Like you deduct that?
So it's just like if my business made $100,000 and I spent $20,000 in expenses, my business would only pay tax on $80,000.
Right.
But I actually spent that money. With depreciation, you don't actually spend the money. The government is giving you all that money back over the life of that property. Why? Because they want you to buy it.
And why they want you to buy it, it's really linked to a capitalist idea that it trickles down.
Well, now you sound like Reagan, trickle-down economics, but just think about it this way.
Okay, cool. Yeah.
When's the last time you got compared to a Republican president, little brother?
Never.
Yeah.
Only when I'm doing impressions.
That's appreciation and depreciation. And then there is cash flow, just taking this building that I'm in that we've been talking about. The businesses that are the tenants in this building, they pay me rent, and that creates cash flow, which means I can create a podcast with my little brother. So people invest in commercial real estate because it creates cash flow. And you want to kill a business? Deprive it of cash. That's what makes everything work. And then the last thing is equity. I have a loan on this building, so it's worth something, and I owe on it. And so I have a certain amount of equity in this building. But every time these tenants pay me rent, I turn around and pay my monthly mortgage on this building, and my equity increases. So on paper, I'm worth a little bit more every time I pay that mortgage down. Just like somebody who owns a house has a mortgage. Every time they make a mortgage payment, their personal wealth and equity increases just a little bit. When you own investment property, your tenants in reality are paying your mortgage for you. Those are essentially the 4 reasons why somebody invests in commercial real estate. Now, when it comes to tax season, here's what people who have commercial real estate, here's what they can do. And in fact, the tax code says they should do this.